Hi, my name is Alex Carlucci. I'm here with Dustin Demestri, sorry, and Gustin Cho. Today, we're going to talk about mortgage lates. I'm getting a lot of calls on mortgage lates lately, so I think we should address mortgage lates. So let's just pretend that you had a mortgage late in the last 12 months. I can't say for certain when or why or if you even can get approved with a conventional FHA or VA, but I'm going to say 99.9% you're not going to get approved. I've seen it before, and I can't tell you why you can't get approved or not. So when you do have a late in the last 12 months, I'm going to talk about the options we have for you after I go through all this. Now, if you're clean for 12 months and then you have a bunch of lates in the prior 12 months, so we're looking at a 24-month window, VA will do that because the VA only wants last 12 months. If you have a 120-day late and it was served, a foreclosure notice was served and you saved it, there's some banks that will treat that as a foreclosure and make you wait the foreclosure rules. And there's some banks that won't, they miss it, they don't do the background search, you get away with it. But if you go 120, you got to be really careful because then we have to find out if it was a foreclosure notice was served. But let's say you're doing an FHA loan, you're clean for 12 months, and you have two 30-day lates in the prior 12 months, and the computer's not approving you, we can do what's called a manual underwrite. If you got 330s or 160, you're not eligible for the FHA manual underwrite. So VA clean for 12 months, multiple lates prior to that, no problem. FHA clean for 12 months and 230s, and that's it. No more than 230-day lates, and you can do FHA manual. Conventional is always about the computer, and it's probably not going to approve you with 230s in the 24-month window, even if you got a 620 credit score, but I'm not going to say never. Maybe a large down payment, maybe a lot of assets, maybe. There's no guarantees. You just have to try it. There's no way we can tell by looking at the credit report. We just have to run it and see if it gets approved. Then we got what's called non-QM loans that will do lates while in the first year, the second year, the third year, 90 days, 120 days. And those are treated with a lot of different things going on with that. Now, if you have got a couple 30s, most of my non-QM lenders will do it for you, but you're going to get punished on the down payment and the rate. You might have to put 20-25% down, even with a 660, 680 credit score. These are something I can't rattle off. I have to shop these around. They're constantly changing. Down payments are changing, rates are changing, but we can do it. When you start getting to 90-day lates and 120-day lates in the last 12 months, we reduce it to one investor, and we're just stuck with that rate. And the down payment, if you got a 550 credit score, for example, and you've got a bunch of 90-day lates in the last 12 months, you're probably looking at a 13 or 14% interest rate costing 7 points with 40% down. What that means is this loan's not even doable. It's almost impossible to do. We could try it if you get 6% seller credits, but I think we're going to fail what's called a high cost. There's too many points being charged. Even though you're getting the seller credits, there's a lot of issues with it. I've not attempted one. Most people back away when they hear that rate, those points, and that much money down. But it is available. So what the good news is if you have those lates and somehow you have a decent credit score, you maybe get 30% down, and I have sold those. But when you start getting down the 550s, I've very rarely have I closed one of those loans. I think I have, but they're not common. A lot of customers don't like them, but we have it. So some people have to move. They sold their house. They were pre-approved by another lender. The other lender didn't understand that their mortgage wasn't reporting on their credit. They didn't ask them the questions. How's the mortgage history? The customer didn't tell them. Then the bank does a phone call. That's how they find out they have all that bad stuff. And that's how the loan officer missed it. And they're stuck without a house, so they have to do it. So in that case, I have no problem doing it. We figure it out. We'll figure one way or another to do it. So just keep in mind that if you got lates in the last 12 months, you're probably not going down the traditional route. After that, it starts getting good for FHA and VA. And then after that, maybe conventional if you're clean for 2 years. But if you're late in the current last year, it's not QM for us all day long. And that's how I want to start off this conversation about mortgage lates. So if you guys call in, we have products, but the worse you are, the higher the rate's going to be, the more the down payment's going to be. Go ahead.
I was going to say, Alex, on top of that, so when you're talking about, because a lot of people, they say, oh, I'm completely doomed. And really the next step is if you are in that 500 range or in the 550 range, it's more of us setting up a game plan for the long term and working it out. Hopefully you're not in the position that Alex just said, where you have to move and there is no scenario, we can set up a game plan for you and move forward with it, but it does take time. No, none of us are magicians. So what we'll do is we'll just be honest with you and tell you exactly what it's going to look like and what we're going to need to do to get you to that point. But like Alex said, really what you want to make sure is before that scenario happens and you know that something has to happen, you got to be upfront with us and we got to be looking 12 months ahead. If you know that you have to sell your house because you got a promotion or something has happened and you have to move to another state, you need to know as early as possible, and you need to be communicating with a loan officer as early as possible so that we can set up that game plan.
Yeah, that reminds me. All customers out there, remember this: your loan officer's on your side. They're not trying to stop you from getting a loan. If that loan officer doesn't catch the one thing you're worried about that you didn't tell them, that you might have another mortgage somewhere that's not reporting, for example, tell them what you have, because I tell my clients that these underwriters are like FBI agents. I don't know why underwriters are doing what they do. They could be making double what they make working at the FBI and finding DNA in a hayfield. So they are that good. They find it all. They have artificial intelligence that finds everything out about you. What you got, self-employed, you got foreclosures, they find everything. You got mortgages, you own properties you didn't tell us about. They find it all, and they get to the bottom of each house that you own. They want taxes, insurance, HOA, mortgage history, proof that if you own it outright, that you do own it outright, which can be complicated sometimes. You have to pay $200 to a title company to get proof that there's no lien on that deed. So they find everything, and they make us work hard. So it's better to be honest up front with your loan officer. And if he can give you the right coaching to get you around it, you're gonna be better off than getting blindsided when you think you're about to move in 2 days. And that's when they catch it. The very end, the 11th hour, the whole deal is dead because you thought you beat me, so you thought you beat the system. That's not how you want to play the game with a loan officer. We are on your side. You may not want to hear what we have to say. We might say, no, we can't help you. And maybe you'd rather go through that process and have the hope. I don't know, but it's not in your best interest because they will catch it. 99.9% they'll catch everything.
And if it's taking us 60 to 90 days to make something happen, you have to realize as the consumer, those 60 to 90 days, we could have been working in the background as we move the loan forward. So as Alex is saying, you got to understand that we're basically your right-hand person, right? We are you, and we want you to succeed. But if you hide stuff from us, it can get really murky real quick. And then we have to start from the very beginning again.
Before I answer this question, if you have one mortgage late in the last 12 months, there's a chance, not always great, that you can call that servicer and beg for one goodwill relief where they can take it off for you. I've had customers have success. I've had a lot of failures too. That's an option for you that we could do, that we tell you to do while we're trying to get the loan done. But just be you. Just ask the question, what about your car note? If it's about to be paid off in less than 5 months, would they still calculate those lates? But the rent was never late. So let me talk about people who have multiple lates on everything. Let's say you have a car you've been late on the last 12 months, and then you pay it off and tell me that don't worry, I just paid it off. That does not make the late payments go away. So customers understand that. I get a lot of that. Hey, I paid it off though. So it doesn't mean the lates go away. The lates stay there. But regarding late mortgage payments in the last 12 months, those are like automatic no's. But having a car late, she's asked about a car note. You can have car notes that are late, but the more you're late and the worse your score, the harder it is for these computers to approve you. And you do violate any manual underwriting guidelines for VA and FHA if it's in the last 12 months. Conventional is really hard to get approved with lates in the last 12 months on anything. I mean, it just depends. If you've got 780 credit score and you have one credit card late and you got years and years of perfect credit, your score might drop to 680 and you'll still get approval with the credit card. But if you get 3 car lates in the last 12 months and you're in that same scenario, you're probably going to get denied and your score is probably going to drop to 620. Even though you're at that 620, it's not going to like that you got a lot of lates, because these underwriting systems are looking at behavior. And the more recent the late, the more it's going to deny you because they think you're falling apart. The computer doesn't know you. They don't get to talk to you. And conventional does not do any type of manual underwriting. So FHA, if you got lates on your car in the last few months and you were in a plane crash and you're in a body cast, well, you can get around that. But if you can't say I lost my job, and get around those car lates. So the car lates in the last 12 months are not automatic deal breakers. It depends on your total credit history and what it looks like. If it's a one-off in the last 5 years and it happened 2 months ago, there's a good chance you're going to get approved on all the loans, and maybe even a VA loan, you might get approved on the computer with that type of scenario. But if you got a lot of lates 2 years ago, 3 years ago, and you got a car late recently, it's probably not going to get you approved because you're not proving that this was just a one-off. And again, these are computers. They don't tell us how they work or how they're programmed. They don't want us beating the system. Just from experience and running it and seeing what works, it's hard to get approved. Now, I will say with FHA, I've seen some credit reports that were just god awful. I mean, I'm like, this is not going to get approved, but they had 35% down. It approved it, but not mortgage lates. They were car lates, credit cards, charge off, collections, just a complete mess. FHA is the most forgiving if you got a large down payment. Remember that. You got 40, 50% down, no mortgage lates in the last 12 months. It could get you approved. You could have 60s, 90s in the prior 12 months, 50% down, it'll approve it. So keep that in mind. Keep the 12 months clean with the mortgage. You can have multiple car lates, multiple credit cards. As long as you know you have a large down payment, there's a real good chance you'll get approved.
And understand out there, the people that are watching, we're not advocating you saying it's
Yeah.
better to have a car late than this late because of the mortgage. I'm literally in almost the exact scenario that Alex was just talking about. Have a borrower, but it's cash out refinance. So some of this stuff goes along with in the cash out or refinance world as well, where she has plenty of equity in the home and she wants to pay down debt. And literally last month, she's never been late on a mortgage, spaced it because she's stressed out. She missed it by just a small window, paid it, and it was a very low amount. And when we found it, we didn't find it till literally a couple of days ago when we ran the final credit report, and boom, a 30-day showed up late on her Amex. And I told her, hey, this is what you need to do. And I let her know what she needed to do. She made the call. She did what she needed to do. And she's getting the letter that we're going to submit to the credit bureaus to make that go away. So there are scenarios that are like one-offs. And that's once again why you have to communicate with us. We are your financial arm as you start to deal with us. And we need to know what's actually happening so we can get you the best success possible in any scenario, whether it's a refinance, a cash out refinance. You need to do we've had scenarios here at Gus Cho, chapter 13 bankruptcies. We know exactly what you need to do, how much time has gone by, what you need from the courts, what you need from the judge. That's why you need to communicate with us. It's not always a no, and we're going to do everything we can to make it happen.
So just for you followed up with a rolling 30-day late. So I'm not sure can you answer this question while I'm answering what I think you're asking? Is that a car rolling 30 or is that a mortgage? But let me tell you about rolling 30s. In the old days, I've been doing this 27 years. In 98, 99, 2000, they would count rolling 30s. If you had 10 30s, they would count it as one, as long as they could prove it was rolling. It was just really one late and you weren't late every month. You were making the payment every month. They would count that as one late. Not anymore. It's not like that, except for some few non-QM lenders that we have that will treat that as a 1 times 30. But when you're non-QM land, you're dealing with higher rates. So the fact that they're treating as 130 or 10 lates doesn't really matter. This is regarding a mortgage. So the rolling 30s no longer counts as only one late. It's multiple lates. So if you're looking at a 2-year window on an FHA manual and you got 3 lates, but it's one rolling 30, you have 3 lates, and you're not eligible for a manual underwrite. So if that helps you. Now, regarding the car, if it's a rolling 30, again, you're going to fall into that. Will the computer like you? If it's in the last 12 months, are you good enough? Is everything else strong about your file? Large down payment, tons of assets, your credit score is not so bad because you were perfect before that. That's just a computerized thing, but you're not eligible for any manual with lates in the last 12, rolling or not rolling. So I hope I answered your question there. So mortgage lates, the rolling 30, that's as many 30-day lates, that's how many you have. So keep that in mind. If you got 3 30s, it's all rolling 15 months ago, FHA is not going to do a manual. You're going to need the computer to approve you. And again, I would just keep putting more and more money down until the computer approved you.
That's exactly what we're talking about. So this is specifically to just be you. I can see on another screen what you're saying before you pop it up on our screen. So I just want to let you know that this is what we're talking about when we're saying set a game plan. This is something that we can look at and say, okay, look, here's your scenario. This is what you can do. And then communicating with us and saying, well, I do have a larger down payment, or I don't, or maybe I have some gift funds from a family member or someone, maybe your corporation, the company you work for. There are opportunities, but we just need to know.
So Francis just asked a question. I have late payments on my car, January 23, May 23, July 23. When should I apply? Or are these late payments going to be removed from my credit if it's not my fault? Okay, this gets messy. So
yeah,
when it's not your fault, the underwriter's not going to determine that it's not your fault. So you can say that, you can tell me up and down that it's not your fault. If it's not, there's so many laws protecting you at the credit bureaus that you could take that company down and own it. You can own GM financing if they're reporting your credit report in error.
Another one, Alex, real quick, like the scenario that I was kind of thinking of is it's not my fault. Maybe they're a co-signer and the co-signer has been late on it, or they're the signer, there's a co-signer. The co-signer is a younger person or someone in the family that's making car payments. If we can prove that you've never actually made the payment, but you're a co-signer on there, and we can go back to the bank records and show that, hey, it's never actually come out of your account from your funds, but maybe the money is transferred in from somewhere else, and then you're making the payment, but they are not paying you on time, or those payments came from another account, we might be able to save it. Once again, you got to communicate with us.
All right. So regarding should I apply or should I wait? So VA, no. Conventional, no. FHA large down payment, maybe. So that's how I would treat what you tell me about those 3 lates in the last 6 months or 8 months, whatever you want to say. Those 3 car lates are not disqualifiers by themselves, but the probability of you getting approved by a VA underwriting machine or conventional is very, very, very small. With FHA, with a large down payment, it's very strong. Depends on the rest of your credit history. So you can't just single out that. If you're telling me everything else is perfect and you got tons of good credit, maybe it'll be 10% down for that scenario. But let's say you got a lot of other, marks on your credit. Maybe it's gonna be 25% down. It just depends. So FHA is an option there for you on that person. So if you told me that, the first question I would say is, do you have a large down payment? That's exactly what I would ask you if you told me that the first thing. Go ahead, Gus.
Yeah. The only way that it's not your fault it's going to fly is if you're a victim of identity theft. If you had if somebody else grabbed your credit card and you weren't responsible, get a police report. Those normally will work. You know what I mean? But it's got to be a legitimate, you got to file a police report. Now, sometimes you're going to run into a situation where your brother or a family friend, your son, took it behind your back. But you know what? In order for it to work, it's not a letter of explanation. You got to get a bona fide police report. You got to file a police report. And normally with those, the credit bureaus will get it removed for you. You know what I mean? Because you're a victim of identity theft. I don't know of any other situation where you can get away with, hey, you know what? It's not my fault. Somebody else's fault. You know what I mean? The thing is you can get a mortgage, qualify for a mortgage and get approved with mortgage, with with bad credit. But what that means is prior bad credit. You know what I mean? If you were a lender, if you were to lend your own hard-earned money to somebody, are you going to lend somebody that's been late, recently? Yes, you'll lend somebody when if they had, financial issues, divorce, whatever. But lenders want to see, even the machine wants to see that you have reestablished yourself and been timely in all your payments in the past 12 months. Now mortgage late is any lates in the past 12 months is bad. Okay. Mortgage lates is the worst. Now a lot of people, they they have a lot of equity in their house, and then guess what? Sometimes they kind of miss their last month payment. Okay. And then they get a 30-day late, or they're 3 months late, and they think that just because they pay off their house, they're free and clear now, they can buy another house. Not so fast, because That's the issue we get into. Some people have $100,000, but they've been late on their payment. They sold their house. Now they can't get a house until they've been timely for the next, 12 months. So basically is this, you can't really, try to beat the system. You need proof. Why were you late? Okay. So, and, you know, credit bureaus are not stupid because that they heard of every single excuse out there. So it's got to be a legitimate, identity theft.
Yes. So this isn't financial advice. I don't think we're allowed to give it, but let's say you're going through some tough times right now, but you know you're going to buy a house in the next 6 months and you're running into a budget problem where you got to decide if food on the table, you got car, you got credit cards, and you got a mortgage right now, but you're going to sell and buy a house in the next 6 months to a year, and you got to be late on something. I mean, I hate to say this, but don't be late on the mortgage. But if you miss your car payment, they come take your car in a couple months. If you miss your mortgage payment, you got a couple years. The credit cards, they don't take anything away from you. So obviously the credit card's the best option for you to go late on, then the car, then the mortgage. Now, if you're not shopping for a mortgage for a long time, you're set in your way and you don't want to lose your car and you think the next 3 months you're not going to be able to pay something, then maybe pay your car instead of the mortgage and let the mortgage go, because that mortgage, it takes a long time to foreclose. I hate to give that advice, but people are going to be going through some tough times here. So I thought I'd say that, but it's not financial advice.
Right.
But
Yep.
when it comes to getting a mortgage, you're not
Yeah.
going to be able to get one if you go late.
Let's take a quick case scenario. All right, say it's husband and wife. All right, but the mortgage is under one person's name. Say it's the husband's name, and the wife's not on the mortgage, but they're both on title. There's a way of us kind of being creative where you can still qualify for a house by not using the husband.
Yes.
But
Yep.
but the wife. All right. Now, say the wife doesn't work, for example. Well, you know what? We're going to need income, right? So we can still use the wife, okay, even though the husband's the late payer is the breadwinner. But then what we do is we got to get like a non-occupant co-borrower, like whether 1, 2, or 3, for until the husband qualifies, and then we can refinance out the non-occupant co-borrower. See, there's certain creative ways of doing that. Alex, you're pretty good at that. So,
Yep. So I got a couple of things. I got a follow up from Just Be You. He said it was a VA loan where they're late on the mortgage and they got way more than a few. So you're probably in trouble. What I would do is just don't be late going forward, catch up, wait 12 months, and then you're golden. Don't be late on anything. I can get you a loan down to 500 credit score, clean for 12 months, late on nothing except medical collections. Okay. For 10 Cal, I'm going to call him 10 Cal because he's got some 20 digits in his name there. I'm going to call him 10 Cal. It's the only word I can see in there. He says, I have 10% down. Most of my credit cards are paid off, but I do have one late payment. So the one late payment, if that's a mortgage, you're probably not going to get into a non-QM either. So you're probably going to have a tough time. But if you have one late payment that's on a car or credit card and you have 10% down, FHA is always an option. So
Yeah,
FHA is very
definitely.
forgiving. So if you're talking about you're late on a mortgage recently and you have 10% down and you want to sell your house and buy a new one, you're probably out of luck because the non-QM is going to want more than 10% down with a recent mortgage late. So that's the problem. You're probably not going to find any loan right now with just 10% down.
you can do a rate and term refinance with 130-day late. You can't do a cash out refinance
Yeah.
with any
Uh-huh.
late. You know what I mean? And guess what? If it's a recent late, no way, right? But if you're late, 30-day late payment's been 6 months or older, you may have a chance. I don't know.
Once again,
FHA does approve mortgage rates in the last 12 months, but not often. I can't describe to you when and why.
Also, don't assume by what we're saying that it's not going to happen. The more information we have, the better. And like I just said, if it's one late and you just happen to miss a credit card payment and you've got your 10% down and we can look at it, we might be able to do something. So don't walk away saying, I can't do it. And once again, like Alex said, we'll set you up for a game plan. Like we'll set you up so that we know exactly when to strike at the right time, and we'll know that timeline. And like what I do is when I have borrowers like this, I'm talking to them about every 60 days. How are things going? What are we doing? Are you staying on track? Let's make sure that we're doing what we're supposed to be doing. We want to be a team together with you. So don't just give up, communicate with us, and let's find out what's really going on there.
So one of the things we can do if you don't have the 20% or 30% down, or so we can hypothetically pretend to pay off debt, and we can hypothetically pretend that you have more money in your bank. What we can't hypothetically do is to remove bad debt, or to hypothetically pretend your credit score is higher than it is. So too bad we can't do that hypothetically with these machines and really guide you. But one thing we can do is say, hey, if you got 40,000 to put down, I know you only have 5 grand in the bank, but if you can get 40,000, I can get you approved right now. Or if you got 10% down and you pay off this credit card, this credit card, this credit card, now your DTI is down to 30, which is way below what FHA will do. But for some reason, it doesn't like you at 56 down. It doesn't like you all the way down, but it likes you at 30% DTI. I can pretend to do that and give you that game plan so that you can say, okay, I can get that kind of money in 3 months, and then I can guarantee it. There might be another combination that would work, but I know what I'm working with, and there might be another loan officer that comes up with a different combination that works. We're all just doing it. This isn't science. We don't know things for facts. We're just trying from our experience what we know. And you might call Dustin and get a different idea, or in the combination of me and his idea is actually the best idea, not mine by itself, or not Dustin's by itself. So don't give up. If one of us says no to you, we're not Jesus Christ when it comes to this stuff. We just know what we know and what to try over and over again from experience.
And we know who to talk to. That's the thing, is like we have even our processors, we're all communicating and bouncing stuff off each other constantly, talking about your file, looking for the win.
Yeah. So 10Cal just said it's a credit card. Don't even worry about that. 10% down a credit card late recently. I'm not worried about that. As long as it's above 500, there's a really good chance. Now, I always tell my customers, if you're 570, 10% down you have a good shot. If you're 502, you might need 20 or 25% down, but that is not the holy grail. It's about credit behavior. So if your credit score is below 580, FHA requires minimum 10% down. The closer you get to 500, the more and more you need down. If you're above 580 and you got one credit card late, I think 10% down will get you in, and maybe even 3.5% would even get you in. So
and with what the person also saying,
the way we do it is this doesn't mean that it jumps from 3.5% to 10%. Nobody knows the automated underwriting system.
Right.
So what Alex will do is he'll try 3.5%, doesn't work. We'll go to 5%, see if it works. It doesn't. Okay, 7%, and then 10%. You know what I mean? So if anything over 580, we have to kind of play around with the AUS system.
There's no guarantee that 3.5% you're eligible for 3.5%, but there's no guarantee that it'll work just because you get your score to 580.
And just by what you're saying, so we can see what you're saying, all these comments that you're saying and these questions that you're asking, all three of us are already calculating in our heads as we're talking to you in real time, and we're starting to check off the boxes and say, okay, you're here. All our clients, I swear, start in the red, and then we move you into the yellow as we're asking questions and moving forward. By the time you get to the application and we start looking at the initial documents, we're pushing you into the green. So I wouldn't be too afraid of what you're showing us right now. I think you're probably in a good spot. Reach out to us and let's talk to you, and let's get a real picture of what's going on.
Okay. Let's take a case scenario real quick here, okay? Say you got a couple of credit card lates, all right, in the past 12 months, all right? You only have 3.5% down payment. You can't come up with any more, all right? So putting 5 or 10% down is out of the question. Well, one of the ways that FHA loves non-occupant co-borrowers or co-borrowers. So even though with those two lates, you got 3.5% down, if we ask a co-borrower, lower your DTI, you may get an approved eligible. Again, nobody has a crystal ball, is how the AUS automated underwriting system finds you. You know what I mean?
So let me jump in there. So FHA, just saw something I've learned recently after 27 years. FHA does not allow a non-occupied co-borrower for cash out, just so you know that.
Yeah, no cash out.
VA does not allow a co-borrower that's not your spouse. Conventional, you can use a non-occupied co-borrower, but I don't know the answer if you can use it for cash out. But if you got recent lates, again, it's really tough to get approved conventional. I've seen some 660s, credit scores, no blemishes, just thin credit, only maybe 2 credit cards open for a year, and it get denied for conventional 5% down. So conventional's they've tightened up the screws on these underwriting systems. I don't know why or what tricks there are. Sometimes you knock it down to a 25-year and you might get it approved. Add a couple mortgage payments in your bank for assets and it gets approved. But overall conventional is a tough route to go when you have any kind of lates recently at all. So I wouldn't even be thinking conventional. I'll try it. If you have to go conventional, if you're buying a condo, I'm definitely going to try it. Or if you tell me, hey, there's going to be 20 offers on this house, conventional is the only way you're going to get approved, I'll try it, but it's probably not likely. And just so keep in mind, FHA is the most forgiving when you got messy credit. It is the most forgiving. Now, VA is the most forgiving because it's only once 12 months clean, where FHA looks at 2-year window, VA only looks at 1. So when it comes to just being clean for 1 year, that's the most forgiving loan in the business. We got some questions here. Hold on.
Did you see that Blueberry? Well, we'll call him Blueberry, local Blueberry.
Yeah, they're 10Cal, I call them. Anyway, the credit score is probably 530. So 10% down, credit card late, I would try it. I wouldn't tell you that's not going to work, but I'm going to say, hey, you might need 15% down. Let's try it though. And I would play around with it. And if I got your DTI down with maybe 10% would do it. So it's just a bunch of playing around with the computerized system. If the credit card was late in the last 12, there's no manual underwrite option for you. So we got to get that computer to approve you. It's either get your debt to income ratio low, get some assets in the bank that you're not going to spend for reserves, or put more money down. So it's just playing around with the computer. So
you got a better chance of getting approved through the computer with the lower credit score and timely payments in the past 12 months versus a higher credit score than a late payment or two. You know what I mean?
So just so you know, I had a 740 credit score that wouldn't get approved on a VA loan, and I don't know why, at 55 DTI, but I can do a manual underwrite at 55 DTI. So it was mind-boggling that I had to flip a 740 credit score on a VA loan. The guy had no lates on anything ever and have to do it as a manual. So manual VA is always, it's an easy way to look at someone's credit and say, I can do this loan. It's the easiest.
Was that, hey, Alex, was that person just kind of close to maxed out on cards? I mean, what was their credit usage?
I remember,
residual income.
I think I figured out what it was, but I don't remember, but I was just shocked. I was just stunned. It might have been a residual income thing or something. I'm not sure. Maybe
back end DTI. It's amazing. Like that's what I mean. You guys, if you're listening out there and seeing this, we see all these crazy scenarios, and sometimes we don't know why, but we'll still keep pushing. We're going to do everything we can to make it happen. And that's what you should be learning from this conversation that you're seeing is, we're not mystics. We're not looking into a crystal ball. We're literally at the craps table, and we're like rolling, and we just keep rolling until we get those numbers that we want. When we get, the 3 threes, we're like, let's go.
Here's a mistake that I made. So I had this woman, had her pre-approved, went through all the way the underwriting, waiting for the clear to close, waiting. She's closing in a couple of days. I was being bothered. We were kind of late on the closing date a few days. And at the very end, the underwriter says, I'm not getting approved eligible. And I'm running it in my system. I'm getting approved eligible. And they had to take it up to their corporate level to figure out the difference. And what it was is they added a new box about a year ago to help people that paid their rent on time, that gives you an extra bump on approval. So the computer is more friendly if you can verify 24 months rent on time or 12 months rent on time. She was living with her husband, who's had awful credit. The mortgage was in his name, and the money was coming as a gift from him from the sale of their house, which it's already closed. They couldn't back out, and they're moving to their house. And I lost my mind. And I was so lucky that she happened to have another account that I didn't know about. It was like $9,000 extra, and her just having that reserves caused it to override that loss that I got from the no verification of rent. So if your loan officer doesn't ask if you pay your rent, that's a very crucial question nowadays, because people check yes, because it's real easy just to say yes when you're first doing an app until you verify it. If your rent's verifiable, make sure your loan officer knows that you're doing an FHA loan with a low credit score, because that may be the make it or break it button that makes it get approved.
Yeah. And you can verify that. There's a couple ways. I mean, everyone's seen the commercials, so I'm not going to mention it, but it's out there. And then also, if you had a good relationship with the landlord, they can write a letter of explanation and they can show statements of your payment coming out of your bank to theirs, however you Venmo, however they're paying. If there's a trail, we can probably use it.
So let me talk about that. You remind me of something. So people are doing land contracts, and they actually record it with the title company. So they're buying the house, but they're renting it for a couple of years until they get their credit up. If you actually do a purchase with the person that your landlord, your rent has to be verified with canceled checks from your bank account. If you pay cash, that's no good. And this is for
no
the
good.
mortgage or rent. So if you do the land contract as a real purchase and record at a title company, your future transaction will be a refinance to get out of that. If you do a land contract, you don't record it. It's more just like a lease to own, and you actually have to buy it from that person and put the money down. So if the house were to go up in value, now you have to put the money down based on your old purchase price, versus it's so easy to refinance if you do the title one. But either way, your rent has to be verified. And if you got a late payment on one of those rent payments or mortgage payments the last 12 months, it's an automatic no. So that's how they're going to verify your mortgage. Even though there's nothing reporting, you think that your credit's good, and you don't have that proof that that rent or mortgage payment was made from a land contract, you're dead in the water, because there's no way to get the computer to verify that, because it's a private mortgage. So remember, private mortgages have to be verified. And just because I don't see it as a loan officer, you want your loan officer to know that there is a private mortgage. In a land contract situation, I'll know. But if you have some kind of investment property you got with some kind of hard money, and I don't see it on your credit report and you're late on it, that's going to kill your deal. So again, be honest with your loan officers.
It's got to
I've
be
noticed that a lot
exactly to
happens
the-
on mobile homes.
Yeah, it's got to be exactly to the penny. You can't do half cash, half check. They'll throw
Right.
away the whole deal. You know, and
Yep.
you can't endorse your payroll check over to them. That will kill the whole deal. I mean, literally.
So try to use your bank accounts to pay your rents, to pay your mortgages. Always don't ever pay cash for any reason ever to your landlord for any reason. It hurts you. You never know when you need to verify that rent somehow, some way, for
And
whatever.
most people think, hey, I got a receipt. That don't mean shit. You know what I mean?
Yeah.
So
Especially handwritten on a napkin after you guys
Right.
left breakfast.
I don't
It's
care if
not
it's
going to work.
I don't care if it's professionally made. They don't accept it. They just don't. Any other questions? I think that was pretty good, you guys. I think we should wrap it up. I think you guys have some questions. Talk on our YouTube. We got Pauline. She'll transfer the questions over to one of us. Appreciate it. Please like, please subscribe. It helps us help you guys in the future. We get more views and we get more people seeing us, and more people out there are going to learn how to do these tough loans. So
okay, now I'm going to make one last comment here. The thing is just because you're a VA loan, you don't have to go with the VA loan. VA loan is the most stickler when it comes to late payments in the past 12 months. One late, you're done. Okay, so if you do have a COE, you're qualified for a VA. Sometimes say you might have 1 or 2 late payments. Then take it FHA, and then you can refinance it to a VA later. You know what I mean? So you have options.
Exactly. I do it all the time. The veterans, they struggle with it because they want the no money down, but I can't get you closed. But you got the money to put down, just go FHA temporarily for a year. It's not going to kill you. It's not that big of a deal. Absolutely.
Oh, we got another question. Did you see that?
We got Marion. Would getting and using a secured credit card and paying it off before interest is charged help grow my credit score if I have a lot of debt that I'm currently paying off? A secured credit card always helps. It initially hurts you because you ran your credit and got new debt. So the first month your score might drop, but after that it should build up. Even if you pay it off before there's any interest, just activity on it. Somehow they pick up that there's activity.
Yeah, we call it credit utilization. You just, as long as you're making those payments consistently, if you did a big lump sum, because usually when you're getting a secured card, you're like only allowed a certain amount in the beginning. What you really want to do is, as you're doing it, like pay your gas, like pick something that you're going to basically max it. You're going to use 90%, pay it off, 90%, pay it off. After, I think it's 90 to 120 days, that credit utilization will start to show up and it will help you.
Yeah, absolutely. I always recommend my clients to open 2 secured credit cards, never just one.
Yep.
We got a follow up from Just Be You. Does it have to be exactly 12 months with VA? Yes, 12 months, no lates on anything. And here's the good thing about here. Let me tell you something that brings a good point up. So let's say you want to do an FHA loan and you need to wait to the certain date you'll be 12 months clean, or you'll be 24 months clean from something, or you'll be 3 years from a foreclosure. You cannot enter into an FHA contract with the seller on a purchase, and you cannot start your application until that date. So you have to wait until that 12-month period happens. So with the VA, it's better. We can start the pre-approval process 3 weeks before your 12-month is clean. As long as we close after that 12 months, you're fine. So there's no hard date when you can start. It's when you close. FHA, you have to start after that date. So keep that in mind with it. If there's a drop dead date, FHA, you have to wait until that drop dead date. VA, you can start and then close after that drop dead date.
Same with conventional, you know.
Yeah, conventionally, there's no drop. Yeah, you can, same with conventionals like VA. VA and conventional follow a lot of the same rules.
Well,
All right. Anything else, you guys?
I just see this. We got another question.
Scott, I have a nurse salary with 550 credits due to late payment. Can I buy a home in 1 year?
It depends on the late payments. I think if you're brand new to the conversation, Scott, then basically what you're looking at is you got a 550 and you've got a salary. That's huge. Now they love that stuff. When we can show payment history, you go past 2 years, there's a lot that can be done. But with a 550 and you have a salary, now there's a couple other things we need to look at. I know that you're saying late payments, but what are those late payments? And then from there, we can say, okay, what does your DTI look like, which is debt to income ratio? What is your LTV, which is loan to value? So there's all these little pieces that's like a chessboard that your loan officer or mortgage advisor is actually looking at and saying, how do we make this happen? So what I would say, Scott, is reach out to us and let's have a conversation and find out what's really going on there. But
you might be ready now if you got 10% down FHA.
Yeah.
That late payment doesn't disqualify you from FHA right now. Anything else? I think that's it. Oh, we got one.
Oh, there's another one.
What's a fast way to achieve a 700 credit score? Currently, one auto loan, one credit card over 2 years, no late payments, and one new card just opened. Currently at 630. Want to buy a home? Wow, that's a tough question.
no.
I would have you add an authorized user.
Alex, I did that actually. After I filed bankruptcy, it took me less than 8 months to get to a 700 credit score. You know, and I play around with that. I've been fixing people's, or actually, messing around with credit scores for a long time. 3 secured credit cards,
Yep.
minimum 500. Okay, credit limit is the key point. All right. And then 2 installment loan, like Self.Inc. or credit rebuilder card. All right. And then on top of that, if you can add yourself on as, do the Experian credit boost, and if you can add yourself onto like a couple of authorized user, you can probably get to a 700 credit score within, I would say 6 to 9 months. I mean, that's how long it took me. But
just remember, don't go canceling or, don't cancel those cards. Once you start the process, don't be like, oh, I'm good, I can cancel these, because literally lines of credit are what going to help you. And then when we see the credit utilization on those lines of credit and the bureau see it and it's rotating and you're using the credit and then paying it off and then using the credit and paying it off, that's what's going to make that boost. So don't just go max them out and then sit on them and make minimums. You need to be going up and down, up and down, up and down.
Yeah.
That's what's going to do it.
I wouldn't use no more than 20%. Let me tell you something. I paid my Discover card 20 grand about, I don't know, a couple of weeks, like a month ago. It's still showing up at 20 grand, even though I got it all paid off. So I wouldn't go more than like 20%, but you do have to kind of use your credit card, like $10 here, $20 here. That's fine. I won't go like 90% because you're going to get stuck. Some credit cards don't report, until like 30 days later, you know what I mean? So, but what, Dustin is saying is correct. You got to, to get maximum optimization on credit cards that you have, can I use like 10, $20 and then pay it off? 10, $20 paid off.
Sure. As long as you're paying it off, zero, whatever, zero, zero sum, you're going to move quick.
Correct.
So guys, I'm getting told by my producer, we got to cut it off now. Real quick.
Okay.
Just be you. LOL, once car's paid off, do you all have info on how to get the whole thing out of my credit? You have to talk to the auto loan company saying, if I pay this in full, will you remove all the lates? That's something you have to negotiate. Try to call back.
They're not going to do that.
They might, you never know.
Maybe if it's what you call a get me done dealer. If you're talking to a get me done dealer, maybe.
All right.
But if you're talking about Toyota or, Honda, it's not going to happen.
All right, you guys, I want to say thank you. Thanks for watching us. Thanks for all the questions. We appreciate it. Please join us next Tuesday. We don't know what the subject is yet, but look on our YouTube channel. We'll announce it shortly, what we're going to talk about. Hopefully you guys join us for that. All right. I want to say thank you guys. Thanks.
Yeah, thank you, everyone. Appreciate it.